Good afternoon. Welcome to European Entrepreneurship and Innovation at Stanford Engineering School. Today is Monday, March 5th. My name is Burton Lee. I'm the course instructor. Today, the topic of our session is the state of tech in Europe. We're very privileged to have two speakers who are going to be presenting some really interesting data analysis, data collected for the year 2017, 2016, and prior years in Europe on the state of startup and scale-up deals, venture capital financing, and mergers and acquisitions activity by European corporations of startups. So our two speakers today are Marco Marinucci, who is from Silicon Valley / Italy, founder and CEO of MindTheBridge, and a longtime friend, going back many years here in the Valley, formerly of Google also, and Gené Teare, who is head of content at Crunchbase from South Africa and Silicon Valley. So you're our first South African to present here. Thank you both very much for coming. And as I mentioned today, we'll be focusing, this is our second session on pan-European trends. Our prior sessions, with the exception of last time, February 26th, was on specific countries and regions of Europe. So these two sessions, February 26th and today, are covering pan-European trends in Europe and issues. So very pleased to introduce Marco Marinucci. We're going to do a quick slide switch here. Marco, thank you for taking time to prepare these slides and tell us what you at MindTheBridge have been doing. Oh, I also forgot to mention, this, I believe, is the beginning of Startup Europe Week, is it not?
Well, since you say that, okay. Yes, it is.
Okay.
Let's make it.
So, which is a very big deal. And you are partners with Startup Europe Week, are you not?
Yes.
At MindTheBridge?
So we definitely are one of the main partners there. Okay.
So let's give a hand for Marco Marinucci. Thank you.
All right, thank you, Burton. In fact, actually, first of all, I would like to thank you. I think you mentioned that we are the industrial partner of this class. I have to say, we're a small company. We're just a 10-year-old. And I'll give you a little bit of a background. But I have to say, the first time we normally live out of sponsorship ourselves. And this is the first sponsorship that we were able to accomplish. So very honored that the first sponsorship of ours would go to you in general for what you've been doing all these years. I think you have left a significant footprint, in particular for the European community. So in fact, actually, I would call it to you and call it a round of applause to you for what you've been doing the last 10 years. So thanks for that. OK, now let's get started a little bit. We're going to have a back and forth between me and Gené here for the rest 45 minutes, I think. I think I'm going to start with there's good and bad news here. The bad news is the following. Initially, I think this session would also schedule with somebody from Atomico, famous VC in Europe, to happen. I'm sorry, it's me here instead of them. That's the bad news. On the good side, I think a good chunk of the content, or some part of the content that Atomico used for their report on the European scene of in startups and tech is actually coming from us. So that's what you're getting instead. All right, so a few words about myself. I've been here now 16 years and counting, originally from Italy, as my name says. I was, again, background, I'm an engineer. Sorry, nobody's perfect. In fact, as part of the connections, I studied in Italy, but my dissertation was done with Stanford, not at Stanford, which makes a big difference, but with Stanford. And my professor at the time was John McCarthy, who was talking about '92, one of the fathers of AI, at least the first big concept of AI. So kind of, back to the future, returning here. Years after, in the meantime, I was involved in a world of .com of Europe in the 90s, kind of a smaller version of what happened here, typically in the right place but at the wrong time. In fact, I landed up here in 2001 when, as you can remember, some of you can remember, the world was collapsing. So, September 11th, that was exactly 2 weeks after I landed here, where most of the people, in fact, here were moving out and moving away. And it was supposed to be, I was talking to somebody here, something temporary for a couple of months. It's been 16 years. And as it normally happens, you got stuck in Silicon Valley. So that's what I've been doing in these last 20 years. So first, a number of startups around Europe in different places. As you can see here, I was in actually south of France, in Spain, and in Italy sometime, and in UK. The last startup I was working for was actually based out of France, in Sofia Antipolis. What was supposed in 90, I don't know, the ones of you that actually have a, remembers that name, was supposed the Silicon Valley of Europe. That was one of the promises. And so I took that promise, but then I actually realized the real Silicon Valley is something a little bit different. And that was in, as I said, 2001. That was fortunate enough to join Google, the pretty early stage. It wasn't really the startup as I was used to, but it was a couple of thousand people when I joined. That was 2004, end of 2004, beginning of 2005. And when I left, there were 47,000 people. So I kind of had a, that lucky experience of living the crazy growth of a startups that happens just in Silicon Valley, at least at that stage. So it's been kind of my fortune. In a few years after that, though, again, my passion has always been this, is the world of startups as well. So I started MindTheBridge's foundation. This is 2007, so we're turning 11 almost. And the focus really of MindTheBridge initially was really to support the world of potential, hot startups that we could filter from Italy. In particular, also connecting them with the number of role models that I just discovered here. I just noticed this here. Giacomo, I'm sorry to call you out here, but Giacomo Marini, one of the co-founder of Logitech, was one of the ideal role models for us. So people that came here maybe 20 years earlier and really made it big and maybe successful with the rules of Silicon Valley. And so for us, that was really also for me a way to gather and reach and have things that I didn't have when I was on that, on the other side as an entrepreneur. So really to create that that platform where future entrepreneurs could really see a direction in front of them and being connected with a world of mentors as well. Bear in mind, 2007, I think Y Combinator just got started, so the whole world of incubators, accelerator was really incipient, didn't quite exist. So that's when we started, and I'm going to talk about this a little bit more. I'm also, and as part of things that happened, I became an angel investor, started a fund a few years ago. So that's kind of, I have a couple of hats. I'm also on a board of a fund of a business school here. I'm going to talk a little bit about MindTheBridge in general. So as I mentioned, that's an organization I founded in 2007. Really, the focus has been the same. The implication and the the activities that we end up doing every year is changing together with the market. What we see is the requirements of the market. But really, our focus has always been innovation and startups. And so the activities that started, as I mentioned before, it was still, you see it was before gray hair. But the typical picture, we see this professional pictures, old people that have been to Google in general. So if you see it on LinkedIn, they will keep that same picture. I keep that same picture from 2007. So in fact, I think I was, the last time I was here speaking when Burton invited me was really at the launch, I think, of MindTheBridge. So I was representing Italy for that. That was, in those years, that was my side project at Google. If you know, Google has a 20% time policy where people are allowed to work on their 20% and 20% of their 120% time, but they're allowed to work on activities they're really passionate about. In my case, at least that's the way that I like to think of it, was startups and really the support of the startups. And that's when I started a company. In 2007, then I started working with, as I mentioned before, initially from Italy. And then when the activities actually started growing significantly, I structured an entity, and I found also a partner in Italy that is Alberto Netti, my partner in crime. It is also university professor. So part of the data that you see, I actually credit him for that, because he's more on the university side of it. I'm more local on the business side. And so for the first few years, for the first 5 or 6 years, we really worked in supporting startups, initially from Italy, then from the rest of the world, until the activities that we were doing was so, for me, so significant that my 20% time became the 40%, 50, 60, 70% time. And so it was a little bit too much to take. And so I quit. And then in the meantime, I started a fund, an early stage fund, where we're doing investment on the early stage startups that we were supporting. In 2013, that's where we started working, in fact, on the other areas of the entrepreneurial ecosystem, we started really working with large corporations. There was also the time where we started working with the European Commission. And so we're going to talk a little bit about that, because some of the activities and funds, as you know, if you've been following Burton's classes here, you know that European Commissions in general is one of the major funder of a good number of activities, including most of the VCs, in fact, somehow are funded by the European Investment Fund. That is really part of the government support. Now, 2013 is when we launched, in fact, what is called Startup Europe Partnership. Burton mentioned Startup Europe. How many of you have heard of Startup Europe? Please raise your hand. Just a few, about half of you. So Startup Europe is an area of activities that European Commission has been focusing on to support entrepreneurship in general. So it's really, if you go under the startupeurope.eu website, you find a number of projects and support that they've been coordinating. That was 2013. Today there is much more. So, you know, honestly, every side of the European Commission has some sort of activities that deal with the European Commission. But that was the very beginning. So we started working with the corporate side of it. So our focus since then has been very much into the integration of what large corporations need in terms of innovation, in terms of startups, both at investment side and at acquisition side. So, but that's when we launched Startup Europe Partnership. So that's in November 2013, when we eventually launched it with the first few supporters and partners were Telefonica, BBVA, and Orange. And January 2014, that's when actually we launched officially the Startup Europe Partnership. Now, you know, that's what has been our focus ever since. We also, today, just to give you a picture, we serve more than 20 corporations. We have offices, our main offices are here in Soma and San Francisco, but we also, as Burton mentioned, our core of activities in Europe is based out of London. We also have offices. We're a little liquid company, meaning that we have more people than offices, actually, more offices than people. But we're kind of spread out in hubs of innovation. So London is really where we're concentrating a good chunk of the activities of Europe, as well as Barcelona and Italy. All right, so this is just a lot of information, just to give you a sense of that we do a lot of things. It's probably not easy to read, but this is some of the clients and corporate clients that we serve. Really, as you see, we say here, we feed into corporate innovation hunger. That goes really from the cultural side all the way to M&A. So we engage with a number of large corporations. You see some of the logos here, really from the immersion of the activities of in Silicon Valley, all the way through the deal negotiation of some M&A with startups. And so you see, you know, in parallel, so some of the companies that we've been dealing with for technology scouting, investment advisories, or M&A. Lastly, before I pass it over, and this is more of the topic of the next half an hour, we also produce a lot of data. Again, for a number of reasons. Number one is also because my partner is also coming from this world of reference, but more importantly, because we really care that our actions have to be driven by data, also our support with the large corporations. And so we've been studying for quite some time different areas of the entrepreneurial ecosystem that is not just based on your gut feeling, but really on how are these trends changing over time. So those are just a few reports that we've been publishing. This is just from last year, and some of the data that I'm going to show are a mix of those reports, and some are actually here. Just to give you a sense of areas of activities, there's one chunk of activities that is in the bridge between Europe and Silicon Valley. So we have a report about the dual companies. So how many startups today start with a company that is multinational? So with an office here and the development on the other side. We've been covering really the economy of startups of Europe. So we've been publishing for a number of years now. The Scale Up Europe monitor really is up-to-date activities of what's the stage, what is the size of the market, of the startup economy, as we call it, and a comparative analysis among different countries. And then we focus on stuff that is a little bit more transactional, so this gets closer to our real business. So the report in the middle is a report around M&As. This is actually the one that we've been doing together with our friends at Crunchbase. There's really an analysis of the last 15,000 transactions that happened between large corporations and startups, and really making sense. How is that changing over time? Then another one that might be kind of interesting to cover, we'll have a few data, but it's about really this flow of corporations from Europe that are setting up their outpost of innovation in Silicon Valley. Some of you are actually here. So this is just to give you a range of studies and reports that are all available. You can download it. I'm going to post in a few slides the link where you can download it. All right. So before I pass it over, Burton asked me to give a definition of scale-up, because we're going to talk about scale-up and scale-up Europe in general. So how many of you have heard the word scale-up, first of all? Because this is something that is actually highly European. Here, we don't really need to have a difference between a startup and a scale-up. The big difference, and that's when we started the whole movement of scale-up, is really because in Europe, there is a really big gap between the early-stage startup and a startup that is growing, that is leaving significant footprint, both at the economical level and at revenue level, a number of employees that they have. So we really wanted to focus on this is the gap that has been missing today. 10 years ago, when I started MindTheBridge, really, even the gaps to fill were more. First of all, was really the number of startups that were being created were very little, very few, as opposed to here. The number of the amount of intellectual property was being filed was much less. So today, that part actually is somehow comparable to what happens in US. What is not comparable is how mature the size of the number of startups that grow from that phase of initial stage into a more mature company. So that's where we really wanted to focus. And that's why there is a whole movement of scale-up Europe in general. And to go back to the definition, there is not a single definition of scale-up. This is the page on Wikipedia, which we helped create. In fact, we started it a few years ago. And it says a number of things. In the definition here, it says that according to OECD, a scale-up is a company who has an average annualized return of at least 20% in the past 3 years and at least 10 employees. So that means that 3 years ago, they already had 10 employees, and they've been growing ever since. One of many definitions. So in our report, this is just for the rest of the presentation. What we consider a scale-up is a company that has already at least $1 million in funding or in revenues, one of the two. Okay, so that's you need to always read in a fine print what is considered a scale-up. All right, and with that, I think I'll pass it over to Gené.
So welcome, everyone. My name is Gené Teare, and I'm head of content at Crunchbase. Thank you, Marco. We've worked with you guys for the last number of reports, so you've been a great partner, so thank you. And this is my first time presenting at Stanford, so it's lovely to be here. I have to say that Crunchbase was started at the same time as MindTheBridge, so it was around 2007. And I joined Crunchbase within the first 6 months of it founding. So I was the third employee. I'm now the last man standing still, and we're about 60 people. And as Burton said, we're a Series B-backed startup. Thank you. So today, I cover at Crunchbase. I've been there 10 years. I cover gender equity, so I write a lot around female founder trends because we are a global startup database. We have a huge number of founders within Crunchbase. And looking at founder trends from the numbers was incredibly interesting to me. So I started reporting about 3 years ago on gender equity and then also on women in venture. I also write a little bit about unicorn funding trends. We have a unicorn leaderboard. And I also cover broadly funding trends as well within the Crunchbase dataset. I'm going to touch on all of those themes today. Just to let you know that I did start my early internet career in London. I started a company called Siberia with a C, which was an internet cafe chain in '94 in London, so I'm aging myself. We also started a sister company, EasyNet, at the same time. And what was very interesting then is we went to the city to try and raise money, or we looked for venture investing. And at the time, there were two firms that we talked to, and both of them were more private equity firms. We talked to 3i and Rothschild. And outside of those two firms, in around '95, there were no other venture firms within the London scene. We were offered by one of them, I can't remember which, around £1 million for 50% of the company, which we said no to. And we took EasyNet, which was a consumer ISP, public within 3 years. So my perception of a startup is you start a startup and you take it public within 3 years. I came to the Valley 20 years ago to join my husband, who started a company called Real Names, and I thought I'd be here for 3 years just because we'd start the company, we'd go public within 3 years, and then we could go back to Europe. I'm still here. So what I want to kick off with is just the leading countries within Europe. And I think everyone who's followed the European scene knows that the United Kingdom, and specifically London, is at the heart of the European ecosystem. One of the things on the left, you'll see seed and venture funding. So I'm not looking at private equity or technology growth in startups, but specifically seed and venture funding. So if you added those in, these numbers would be higher. And the UK is far, almost double the size of Germany today. I think one of the interesting things that we're going to be looking at is, does Brexit impact this? With the movement of labour, people easily came to London. The venture scene kind of started and grew out of London, I think partly because of language, partly because of its ties to the US. There are entrepreneurial people who sold companies within the US market and then went back and started venture firms. And what's going to be interesting to see is, as European funding is taken away from the UK ecosystem, which is already happening to friends of ours, C-Camp specifically, and also as the movement of labour becomes more restricted, it'll be interesting to see how this changes. You'll also notice that all of these, in 2007, the investment dollars are on the right, and all of these markets are growing, and the UK specifically has grown a lot over the last 5 years to hit 7.1 billion in 2017. Next, if you just look at the size of investment, I wanted to compare Europe with Asia and America. Again, we're looking at seed and venture funding for 2013 to 2017. What you'll notice is Asia started off at a similar base to Europe. It's around 6.5 billion. And that grew, Asia's grown in this 5-year period almost 7-fold to around 51 billion in 2017. When you look at Europe, it's more than doubled over the time period from around 7 billion to close to 19 billion. So it's grown around 167%. And then if you look at the US, it's obviously at a much larger base, it's less than doubled. So it's moved from about 40 billion to about 75 billion. So Asia clearly has grown massively within the last 5 years, and we're seeing that obviously within the data set. Europe has grown, and I think still has a lot of space to grow. If you look at the markets before, some of the markets in fairly substantial countries, the amounts invested in 2017 were 200 or 300 or 500 million. Clearly, there's a lot of space for venture to grow within those markets and for startups to grow within those markets as well. So I anticipate the 19 billion that we're seeing here next year will continue to grow within the European ecosystem. When we look at funding trends, we focus a lot on early stage, so we look at seed and Series A to try and understand the market. What we've seen in the last 10 years is that seed has become its own stage of funding. And what you'll see is Europe, in a way, even though it's at a lower base, mirrors the US in that the seed as a funding stage is growing and maturing, and we see that by the amounts going up. And both of these markets doubled. So I think Europe started about 0.5 million in 2013. The US was at about 2.7. Both have doubled. Europe is now at around 1 million average for a seed, and the US is at about 1.4. So the US companies are valued higher, but both show the same trend of valuations going up for companies, or investment dollars going up. We also look at Series A. Series A is typically the first institutional. It has now become seed as the first institutional money. But we've also seen Series A companies go up in funding. Again, Europe is below, but shows a similar trend. Europe's grown, I think, around 33% over the last 5 years, from 5.8 to 7.7 million. And the US has gone up around 40% from 7.2 to 10.3 million in the same time period. Here are some of the top investors within the European market. And what I looked at is companies who led Series A and Series B rounds for all time that they've been around. Index Ventures is a leading investor firm. Most of these firms were founded in the late 90s. Burton and Octopus were founded in 2000 and 2001 respectively. So all of these firms were founded in the late 90s, which is when the venture scene in Europe started emerging. So these are the most interesting firms to look at because typically are putting the first institutional money in.
If I could just point out, there's no venture fund from Germany on there.
Yes.
Gunther, what do you say about that?
I'm working on it.
I'm next going to just talk a little bit about unicorn funding trends. We cover this in Crunchbase. We have a unicorn leaderboard. So what you'll see on the left is all of the unicorns who are headquartered in Europe today. Today there are 23 private unicorn companies within the European market. Overall, globally, there's around 279. The amount of money invested in those 23 companies is around 10 billion, and the current valuation of those 23 companies is around 44.5 billion. If you look to the right, the unicorn leaderboard currently has the amount invested is 206 billion, so the European market is about 5%, and also from a valuation perspective, it's also around 5% of the 1 trillion that unicorns around the world are valued at today. For these unicorns, the ones that are the most valuable is Spotify, which is valued at about 8.5 billion today. German-based Auto One, which connects buyers and sellers of cars, which is valued at about 3.5 billion. And UK-based The Hut Group, which is an online retailer for health and beauty, which is really valued at about 3.2 billion.
Can I briefly interrupt here?
Please do.
Can anyone tell me what is the most highly valued company in the history of human civilization? So the Dutch East Indies Company, which was headquartered in Holland, did a lot of trade around spices. One estimate that I've seen that looks fairly credible, based on current dollars, inflation, would be valued today at something around $7 trillion. European out of the Netherlands, not IT. Just a point of historical reference.
What century are you talking about?
This would have been 17th century. Yes, during the tulip bubble, the tulip craze.
This next chart is just looking at new unicorns by continent. In the middle, you'll see the European unicorns and the years that they were formed. So 2015 was the height of unicorn formation. What we have seen when you look at unicorns, though, the funding for 2017 is the highest ever within unicorn companies. So even though more unicorns were created in 2015, when you look at dollars going into the whole unicorn batch, 2017 is the highest recorded dollars per date. In 2015, there was about 1 unicorn created globally every 3 days. And what you'll see is that at the height, there was 1 a month from Europe. From the US, there was about 1 a week, 1 new unicorn a week being created. These are the top investors in the European unicorns. So Index, we've obviously all seen before. What's interesting here is it's not only European-based investors, alternative investors, but also Asian investors who are moving into the European market. You saw how much Asia has grown, and obviously Europe, there's some proximity, and Europe becomes incredibly attractive for companies which are growing for Asian investors as well. These are the 4 unicorns in Europe that have gone public to date. All 3 of them went public above their last private valuation, except for HelloFresh. I think it was a smidgen off, about 20 or 30% off, and I think has since gone up and is kind of at or exceeded the last private valuation. So for all of these companies, their IPOs were pretty successful unicorn IPOs. Yes?
The German IPOs here were all out of Rocket Internet. Those were all Rocket Internet companies.
Yeah, and it's interesting to see Germany dominates for this category. For acquired European unicorns, there have only been 3. And when we say what a unicorn is, it's a company who was valued at $1 billion as a private company. So we don't count companies who exited $1 billion or go public at $1 billion, but companies who were valued in the private markets at $1 billion. And for all of these companies, they all were acquired for less than their last private valuation. I think Shazam at the least, they were acquired by Apple for around 400 million. And their valuation obviously exceeded $1 billion. This is my final slide. I look a lot at gender trends. This is for European startups across the board, for how many venture dollars have gone into female-only founded startups was around 2% across the whole of Europe. How many dollars went into female and male co-founded startups was about 7% across the whole of Europe, and 91% of dollars went into male-only firms. This is somewhat similar to our global trends that we look at. The percentages are a little higher. It's around 4% at this stage for sole female-founded startups, and around 9% for male-female co-founded startups. So clearly in Europe and here in the US, globally, we have a long way to go. I just want to finally quickly say that Crunchbase has a lot of data. We built a very simple query tool on top of the Crunchbase data set. It's called Crunchbase Pro. It is priced for any business user. I think it's affordable. It's priced at around $348 a year, and it allows you to quickly query and look at stats around anything to do with funded companies. So you can look at Series A funded fintech companies in New York that have raised in the last 3 years. You'd be able to see all those companies and also look at stats for how much they've raised in total and on average, et cetera. So those are some of the queries that I pulled that related to this presentation, but there's a lot of data in Crunchbase, and it's pretty easy to pull and look at the data set. Thank you.
Thank you, Gené. Question for Gené?
Yes.
I'm wondering, you showed splits by gender, but do you have a split of European startups, B2B and B2C?
So we do have B2B and B2C in the Crunchbase data set, but I don't have that here, but that's something we can look at.
Generally, in Europe, is it generally much more B2C than B2B compared to what's happening in the US?
Marco, I don't know if you know?
I don't know.
No. I'm not sure, to be honest, but good question.
Okay, so back to Marco.
So Gené, please stay with me, because we have an overload of data, so please bear with us. And maybe it would be nice to have a stop every so often to ask questions rather than do it at the end. All right. Let me see here. OK, so from what Gené mentioned, I think we added a couple of slides just to give you a sense of some areas that we thought could be relevant to address when we're talking about the economics of the startups in Europe. So two things. One is the effect of post-Brexit. This is just to give you a sense. You can't see very well here, but I mean, there is a bar on the different color there. Basically, the number, if you consider UK in or out, it makes a whole big difference. Because half of the startups or scale-ups will be out, pretty much, 45%, as well as the capital raise would be half of it. If you want to consider Europe as the European community, would be out. So significant difference. The other thing that I would address on those is really the effect of IPOs for European scale-ups. So those are, again, data that are coming from our report on dual companies. Three data that I think that would report here for you guys. So number one is that only 2% of the startups of the total scale-up again, in the definition that I mentioned before, so companies that raise at least $1 million or whose revenue is at least $1 million. So that, larger size. Only 2% eventually end up having an IPO, and only 15% of the capital they raised in Europe is actually coming from IPO. On the other side is just for the more mature IPOs, so the 100 million plus, 45% of those IPOs of European companies happen in US. So that's a trend we're going to see over and over, right? So when you want to grow big, you come to US, one way or the other. IPO is one of them, and they raise, on average, 6 times the amount of capital that comparable companies and startups raise in Europe.
Marco.
Yes?
Are you seeing any European companies going to China first to grow big? Has that started happening yet? Do you expect it to happen?
That's a very good question. That's a trend we haven't tracked yet. But when you start seeing the size of capital, China in general definitely will play a very important role there. So, but here we're just talking about IPO. So IPO in China is definitely not the easiest route, clearly. The market is clearly is. Yeah. But definitely that's, Asia is definitely one pole that we definitely need to look at when we're seeing all the flow of capital that is happening with Europe in the center. Second piece I wanted to to address here is the European dual company. So again, how many of you actually are entrepreneurs or related to startups? Raise your hand. So a good chunk. All right, the vast, at least that's what I've been seeing here. Now, the fact that a company is really multinational from the beginning today is more the norm than the exception, especially if you want to hire local people here, local engineers and product managers. Very complicated. So the norm is that you have your part of your development, your CTO sitting somewhere. And Burton's classes clearly have been addressing that topic. So the dual companies as a setup from the very beginning is becoming more and more of a norm. We see that 14% of the scale-ups that we have filtered are a dual company. So they have a part of the operation somewhere outside of their home country. A good chunk of them is not written here, but 84% are actually 84% have their extension in US, and out of those, half of them are here in Silicon Valley. So again, there's nothing new for you guys, but this is definitely a proof of this attraction, really, of the ability of Silicon Valley to attract at least one part of the startup that is moving out of here. Does it make sense? Does it help? Well, data shows that it's helping, because the companies that are dual raise on average 30% more of capital. So if you compare, somebody who's just working in one country versus the ones that have somehow already an extension in international markets, 30% more capital than just addressing their own domestic. All right, I think last one on those. So Gené mentioned the size of the world of unicorns. Yeah, as you guys know the definition of unicorns, yes? So companies are valued at least $1 billion. Valued. Nobody knows, right? So the valuation can really vary significantly. In fact, actually, it's going, so the number of down rounds that have been happening. So it's very hard to place it. So this is another way to look at, hard numbers. We did more of an analysis based on, actual capital that is being raised. So capital that at some moment in time was in a bank, not market evaluation. So, and here we showed two areas of companies. So one is what we call the superscalers, the really cool stars of Europe. Those are companies that raise at least $1 billion, at least $1 billion raised, okay, of capital. And when I say raise is, from all different sources. And we should talk about this, because the sources is really one key questions in Europe. So we just have 4 of them in Europe, and you can see the stars from there. But if you compare this here, this is where China comes from. So there are just 4 in Europe of those companies raise $1 billion plus. They are listed. All this data, by the way, this is all the data that I'm showing for the most part are data that we put together for the report. I wish we had something so simple as Crunchbase. You just press the button, everything comes out. Unfortunately, actually, we have a lot of data crunching. So all the data that I'm showing you is typically through June of last year, right? So we're gonna, publish the new version of those data. But, I think in a trend still makes a lot of sense. 53 of those companies out in the world, Europe is just 3rd, where US has 25, so number 1 in number of concentration of those superscalers, and China has 16. So, big difference.
So IHS Markit, what do they do? Because they're one of the superscalers.
Which one? Yeah, MS Markit. So that's actually what was a merger. So there was a kind of in between. It's a company in UK. It's a merger. Is data analytics in general. So the others are the ones that people know a little bit more. So the ones that also are, So 2 of those 4 from Berlin, 1 out of Stockholm, and the other from London. You've got, yeah. Okay. Yeah, but the other piece that I think is interesting to see is what's coming next. So the baby unicorn, or whatever you want to call it. Again, not based in market evaluation, but more based on capital raise. So that's a list of what we call the scalers. So companies, startups that have raised at least $100 million to date. Okay, so that, you can see a little bit more of what's coming up. And this is a list that of those 86. Okay, so that was a little bit more about, giving a sense of the size, really, of what's coming out of Europe as a, startup economy. Now, the next set of slides is more around the importance of M&A. again, if you are startups, and a good chunk of you are, the one thing that you look at is what is my exit strategy? So how can I monetize this? When is the way out? And that's still the major difference that you guys can see between here, Silicon Valley, and the rest of the world. It's not the number, it's not the capital that has been raised, it's not the talent that's been attracted. The very core of why there is so much of that here is because here, there's a market of exits. That's the main difference. So for everything we said, really, the main topic here that is still a very, a market where there's a lot of opportunities to monetize and to exit. And the gap between here and the rest of the world is significant. So here's that's one of the reasons why we keep track of what's happening between the world of M&A, in particular when there is a connection between Europe and US, and see who's buying what, okay? So this is, we had one last year in 2016. The one that I'm sharing you data from is the last one we did in collaboration with Crunchbase. So Gené, help me here, especially for questions. And the next one actually will be publishing probably in September. So again, as I said before, this is the data that is taken in consideration typically from 10 years back, from 2010 to, actually 7 years, to 2017, June 2017. So that's the number of transactions that we processed. All transactions, that most of them actually came from Crunchbase. 36,000 transactions on M&A. Of those, 15,000 are just of startup acquisitions. That's where the database is coming from. And a subset is the ones is 13,000. So the vast majority are happening between US and Europe in general. OK, so these are some data about this. I don't know if you can actually see. This is just the size of different markets. And so clearly, it's not proportional because the difference between North America and APAC is significant. But you can see dollars and on the right-hand side, a number of M&A, number of transactions, number of exits on the left. So you can see that really North America is significantly higher than all the other regions, when Europe is coming second. But again, want to see some of the trends. And these are the trends. So the good news is that the world of exits, the world of M&A has been growing significantly. There was actually, as Gené pointed out, 2016 has been a very significant year. There's been a number of large acquisitions, and so the data somehow also skewed that way. But you can see that there's definitely a trend that is moving up and to the right, though at least the total, there's more, there's not a proportionality between the number of deals and the total amount of dollars that are coming with those deals. But it's definitely an acceleration that happened since 2014. How is Europe doing in that? Again, is very much of a little brother of US, significantly little brother, although the trends are doing better. So if you can compare number of exit and deal value, it's kind of proportional. But from 2016 to 2017, US is the one on the left, so clearly higher and significantly bigger. But Europe, and the trend is actually positive. So in 2017, the number of exits that happened in Europe at the M&A was just 24% compare of the US, and growing to 27% in 2017. Yes?
I have a question. Do you actually think that Europe will ever be able to reach the level of the US? Or is it like always going to be small?
That's $1 billion question. I would say a million, but that's $1 billion, that's several billions. I don't know. Today, the market trends are interesting to see. The one thing that is clear is that the level of integration between markets is accelerating significantly. And we're going to show from what that means, it's just flow of capital, but also flow of companies, including corporates. So that fluidity of a market as one is probably the trend where we're heading to. Today, there's still a huge gap. So before we get to potential parity, I don't see reasons today, honestly.
So it's worth asking, so what is the reason for the gap? It's multifold. One, European industry as a rule tends to be more industrially focused than consumer focused. So they aren't, historically, have not as been as active around acquisitions. Most of the M&A has been in the consumer-facing product and services areas. Two, traditionally there's a history of doing everything in-house in European companies. This comes in part from the family ownership tradition, but also the sense of engineering pride that we don't bring in anything from outside. We do it all here. There are people. There's also the issue of cash flow. Many traditional European companies don't have the cash. They can't afford to buy a lot of these new IT software companies because European companies traditionally have funded acquisitions out of cash flow more than selling equity. And so this is where there's a broad trend in the decline of value of European companies is declining relative to the US and Asia, but also we're talking about the top 100 companies. Price Waterhouse, other organizations have done studies on this. If your market value, if your shares are one of the prime ways you buy companies, this is how many of the top US companies fund their acquisitions, the value of your shares are going down relative to the value of the acquisitions, it's harder to fund acquisitions and harder to do large numbers of acquisitions. So Cisco, I think in the height of the dot-com boom, was doing 50, 60, 70 a year.
Easily.
Easily at that rate, because they could fund it out of basically selling shares.
Yeah, we're going to actually have a list of the acquirers. So just to add to that, I mean, this is all true. I think there is one extra reason that is probably even more important, is structural. The labor market, of the loss of the lack of a flexibility of the labor market. Here, when you hire in a boom economy like in the last 10 years, here you acquire left and right because you know that when it's a downturn in the economy, you can rephase. You can let people go one day from the other. The same thing cannot happen in most of Europe. So that's really a structural difference that make most of the corporates much more, much less prone to grow through acquisitions. Please.
One thing that I've seen also has been a reluctance to pay the price. So I think that European companies just don't see that they have not digested the concept that they have to pay a significant amount of price to bring innovation inside very quickly, and they are not reconciling themselves. And some of it is the origin, and as you said, I mean, being more family-oriented companies, I mean, that's even if they are publicly traded, they tend to be a little bit more tight, if you want, in terms of spending, and the internal engineering versus the external engineering. But culturally, until they overcome, I think, this fact that it is an expensive proposition. I mean, it has to be a relatively expensive proposition. That's one thing.
Yeah, also, if I could add one thing. If you visit public business schools today in Europe, at the public universities, many of them are not teaching mergers and acquisitions. It's not part of the management curricula today at many public business schools in Europe. Now, this does not hold for INSEAD, the top London School of Business, for example, other top business schools, but for public business schools at the typical public university, the economics business faculties tend to be more theoretical and don't focus a lot on these types of issues, so students aren't exposed to these.
Yeah, and also to add to Giacomo's comment is also the fact that most of the price value of companies here is also driven by the offer. It's an anti-competitive acquisition. Why WhatsApp was worth that amount of money? Because if it wasn't Facebook, it would have been Google. So really the value of avoiding your competitor to become bigger really pays much more. You had another question, sorry, there before. Yeah.
Oh yeah, it was sort of a follow-up. To what extent do you think you would need like a Silicon Valley type area in Europe to even grow that much? Because I mean, a lot of it comes from Silicon Valley. You have like this pool of people that have like similar interests. I don't really see that anywhere in Europe, like to really have like
concentration. Yeah, yeah. This is probably worth another 2 hours of conversation. But I think the Silicon Valley of ... is probably every country has one, or at least an ambition to have one. At the end of it, I don't think is the structural environment. It's more to have the right components that make that work. And again, my experience was in a Silicon Valley of Europe, driven by government, the French government that built the idea of Sophia Antipolis there didn't quite work. the complexity of that is much higher than just ingredients and follow the rules. Bottom line is that this is also something that is changing. And what I mentioned, going back to the comment I made before, is that the globalization is actually a positive actor there. So today, the main question is not how do I copy Silicon Valley, but how do I take advantage of economical conditions to find a value proposition for what I have to provide as an ecosystem. And there are a number of success stories there. They're all small still, but those conditions are changing. It's impossible to hire people here, right? So that's a fact. If you talk to the Googles of the world, their main problem is not to make more money. The main problem is to retain the talent, to attract and retain talent, to grow at the speed that they needed to, they wanted to. And so that creates opportunities outside. So I think the main question to do is, what do I have to offer? What is my value proposition on my ecosystem locally to make it worth, at least in conditions that change? OK, let me accelerate a little bit. This is more to get a sense of who's buying whom, right? So what is the balance between US and Europe and different regions? Just, main concept here is that most of the acquisitions between European and American startups happen between them, among them, 93%, and just 70%. This is to answer your question, Burton. Just 7% that today is happening from outside, meaning that is either an acquirer, typically an acquirer coming from outside of Europe or outside US. And that's worth today just over 1,000 acquisitions. So still very incipient. This is a kind of recap back to numbers. Okay, so we talk about US, we talk about the size of Europe in acquisitions and deals. This is just to give you a sense of, back to your point, the centrality of Silicon Valley. So the size of Silicon Valley just as an M&A market of this, what is it, 60, 70 miles of valley is pretty much the same as the whole of Europe. So a continent that has a significant larger, size and population as well. So that just to give you a sense. The other data here, as a recap, is that a good chunk of the acquisitions happen from US to Europe. So the companies from Europe, the large corporations, the ones that are still not ready for that, but most of them start buying here. I'm sorry. So most of the companies is the other way around. Most of the companies from here, are starting buying outside and starting buying in Europe. And so this is when we published this report. That's what TechCrunch actually named the article, is that US buyers gorge on startups while Europeans nibble. All right, so that was their comment. And you get a sense of also back to the comments that were before, the value. You see that the average deal size of acquired US versus Europe is significantly higher, more than twice, essentially.
Let's just to give a concrete example of nibbling versus gorging. Over the past several years, the major companies here have all been setting up AI groups. The main AI group for Facebook out of the United States is in France. Google has just signed a strategic partnership, as I showed, with Technical University of Munich. Google also purchased 10% of the German Research Institute for Artificial Intelligence. Google purchased DeepMind in London, one of the leading AI startups out of the UK. Where are the leading European corporations in AI acquisitions? Where are they in funding AI groups at German or other European universities? You don't see them. So this is a pattern where the US companies kind of come in and they clean up a little bit. They take all the best startups because they're years ahead of thinking compared to most of their European management counterparts. And this is happening again in artificial intelligence, and it's very concerning. Now, the talent never leaves Europe. So in some sense, this is good for Europe when top US AI companies, Microsoft, Google, Facebook, et cetera, can come in and strengthen local AI competencies. They actually do invest in universities, European universities. But it's troubling to me personally that we don't see the top European corporations moving at the same pace. It's not a secret that the US companies are doing these AI acquisitions. It's very public. But the nibbling, it never gets beyond nibbling, it seems.
Very true. And I actually have a list of acquirers. This is another kind of interesting exercise that we did. It might take some time to realize it. And again, most of these reports you can download it. We're kind of short on time. I give you just a sense. But this is the a tentative to address the if a region, back to what we were saying before, is a region more selling or acquiring talent and technology in general. So what's the ratio between acquisition and the value of acquisition versus what they are selling, both in number of deals and number of companies. And here we did it by continent. So that gives you a sense. If you're right in the middle, one, which is very close to where North America is, you're pretty much acquiring and selling at the same time. There's a very good balance. If you are where Europe is, that means that you're selling more rather than what you're acquiring today. So you're more on the sales side. APAC is actually the opposite side. So it's buying more and selling less. All right, this is just to give you a sense, back to what you just mentioned, of who are the main acquirers. There is a clear list. This is actually an easy query on Crunchbase. Just to give you a sense, most of them are all US. So the top 15 are all US, and 9, again, are from here. So we have it all around. And to try to solve some of the issues I mentioned before, really the attraction and retention of talent, that's why you do it through acquisition. So you just see just a few outside of our area. And here you just get a sense, really, if you want to go the list, you see it's all, all America. See, look from the top. This is from last year, up until 2017. This year is not going to be much different. Google, Facebook, Yahoo. Well, Yahoo probably, yes, a little bit different. Apple, Cisco, Microsoft, you name it. It's actually interesting to see companies like Accenture. They're
based on dollar value or number of deals?
This is, I think, dollar value in total. Okay. Yeah. All right. And if you compare with Europe, just to give a sense, it's not even comparable. But again, London is the one thing that sticks out. So the amount of deals in London compared to the rest of Europe is significantly higher. All right, I'm going to recap this. This is just to give you a sense of what is the profile of the companies that are being acquired, so of the startups. Again, a lot of data, but just to give you, this is on average data. So number of years of age of the startups before getting acquired, if you see here, is mostly in the 5 to 10 years range. So the average is 8. The amount of money that has been raised is actually significant. So it's more than 100 million. So the average is actually 127. Again, out of the ones that the 13,000 that we queried, the number of employees between 10 and 15, and the exit, 70 million. What does that mean? It's not good. It's not good news, right? So that's essentially the world of startups today. So you raise 127 and you sell for 70. So that's what this says. The 71% of the exited startup do not return capital. Yeah, most of it, the majority are fire sales. So they return less than half of the capital they raised, 16% between 1 and 3 times, and just a few, and you know it because you've studied venture capital industry, that return a crazy amount. So this is typically the power law, exactly as we study in business school. All right, so last piece that I want to address. This is more to give a sense of, again, this flow. We talked about exit as also a corporate component there. So one of the trends that we want to address here is to see how is the flow of European corporates that are finally moving closer to here. And again, this is a thicker report, so there's a lot of information here. Just going to give you the highlights. So we, in the last year and a half, we're going to address the new version now and coming in probably in a couple of months. The vast majority of this company, we found 45 companies, going through all the Consulate General, the Chamber of Commerce. So the definition is that you need to have at least one person full-time that lives here, and you need to work on innovation. Innovation is typically, venture capital or, anything that it relates to that, not on commercial activities. Vast majority, high concentration of Germany and France, no news here, and the rest is actually 1 or 2 per country. Those are actually interesting data. What are they doing? A vast majority is now working on automotive. And we know, when I came here 15 years ago, nobody would ever talk about, the place for auto tech. Now, as you can see, it's definitely trends. And then all the others follow. So there's a lot of, finance and insurance and communications, pretty spread out. this is how they are structured. And we have a few here, actually, of corpus. But typically, we organize it in 4 areas. This is really when you talked about open innovation, how you structure the process of open innovation. In our case, the 4 models that we filter are corporate venture capital. So you set up a fund, you put on the side, as a few of those have done. You have a corporate innovation antenna that is typically a couple of people in a co-working space. Or you have innovation labs when you start doing some proof of concept. So you do integrate with the world of startups. Or you do have real R&D centers. So those are corporates that have people in a significant size as well. This is a list of some of the corporates, actually all of the corporates. So you get a sense also geographically where are they sitting. And this is a little bit more of a sense of what they expect out of this innovation outpost. And so some of it is clearly driven by the definition. Clearly, if you're here you have created a corporate, a venture capital, definitely you're there really with a focus on investing and potentially selling some of your portfolio companies, right? So you can get a sense of out of these 44, what between their setup and the objectives, how would they place them, or would you place them in this chart? All right, I think with that, I'm going to finish. You find this and a bunch more of reports. It's all free. You just need to download it. It's under MindTheBridge.com/research. And the whole other thing that I'm going to say is that we would like to have you all, if you can, in September when we have the European Innovation Day. Thank you very much.
Thank you, Marco. Questions for Marco and Gené? So, yes, sir.
One quick question. I saw Roche in that list, acquirers. That was kind of an outlier. Normally you won't see pharma companies in that. Do you see any other such outliers other than?
No, there are a few. So pharma, you started seeing, there are not that many. You're right. So it is an outlier today. But there is a lot of AI happening in pharma as well. So, yeah.
Now, if I took it that your Europe data does not include Israel. So that's
Correct.
only the European
Correct.
continent.
Otherwise, it would be a totally different ball game.
Right. OK.
Yes. Question there.
Yes, sir.
There's a lot of talk in this class about different regions trying to recreate their own version of Silicon Valley. And I was wondering if playing to the strengths of each region, like really good engineers, but not so much like ability to work with consumers, is really kind of a better path forward. Because I think it's pretty entrenched in a lot of the lectures that Silicon Valley is where the European companies want to come. Is there something that each region could do on its own to be the best at, maybe the best AI engineers or, the best B2B, kind of focus their efforts and not try to recreate something?
Gené, I'll leave it to you first.
Well, I'm not sure if I have much to say on that.
No, so I think the classes that Burton is been organizing, it gives you a good sense of what's happening really, and every year is kind of different from the one before. So there are some pockets of exactly what you're saying. I don't think there is still a scale, but Estonia 5 years ago was not in anybody's map, and today we're all digital. Citizens of Estonia as are, some pockets really of where you also create, specific verticals. I think that's still an opportunity that is still not fully fulfilled.
So Cambridge, UK today comes the closest to a single hub region, and I would include maybe Oxford and London in that. It's called the Golden Triangle, Oxford, Cambridge, London. That comes closest to being a single region with enough critical mass of corporates, universities, startups, but it's still far behind the valley. And with Brexit, it's not clear where that's going to be in a few years. Hold on, Seb. Did we have someone who hasn't asked a question? Yes.
Just to contribute a little bit to compliment about Europe, there is the smart specialization strategies that maybe are not well working so far, but if you are interested, you can have a look. But I would like to go back to data and a little bit of what's behind them, because it's very interesting that if the European startup has a dual dual location, like dual located, with many, of course, with US, would it be Boston and Silicon Valley, then they would raise much higher levels of whatever funding, round A or B or so. So from my research and what I see while talking to entrepreneurs, actually the story goes a little bit reverse. First they are discovered and they are talking to certain capital funds and investors, and their request is to establish the US location in order to acquire that whatever round of investment. So it's something, it's not that you go first, you establish like a dual location, then you get the fund, but actually preconditions for becoming dual are being set in a round of negotiations with the investment. So can you please comment on that? Because I know only a few of cases. So how do you see it on the larger scale?
Yeah, I think it's a bit of a chicken and egg thing. Honestly, as an investor, also, well, that's what we tell startups. We do a lot of bridges of startups coming here. If you are not really focused on this as your US, as your commercial market, we shouldn't even be talking. So it's not. I will never tell you I invest in you if you move your company here. Nobody would, honestly. It's just the other way around. If you are not convinced that it is the main market for you, you wouldn't have any serious discussion forward. So that's especially early stage. Then there are clearly exceptions.
Zip.
I had another question, like kind of related to Silicon Valley and the Oxford-Cambridge triangle thing. To what extent do you think it's important to have like as good universities in an area in order for it to be innovative? Or is not that important?
I think it's critical.
Yes.
Yeah. I would say, I mean, one of my husband's involved in a fund in the UK, and what they focused on is university towns, because London is such a big hub at the moment, they focused on all the university towns outside to look at deep tech coming out of those universities to invest and take the ecosystem outside of London. So I think universities and tech talent, engineering skills are critical for those ecosystems.
And there's actually a lot of good research, that's by far. So, here the Friends of the EIT as an entity has been trying to connect most of the research centers around Europe, really to make sense of creating these pockets, as you mentioned. What is missing, though, is a systematic integration between the world of here, of the universities, and what's next. The story goes that, the Google of the world, you find the first money here, when you come to university, and it's definitely, a connection that makes sense because you see the value of the application of the companies that is a spin-off, economical value, huge return, from Stanford, from IP and from Sequoia that is actually being invested, and the endowment of the university is connected with Sequoia is one of the investors. So there is an ecosystem where these two things are really directly impacted. In Europe, there is a huge division between the two. Either you do research or you do commercial business.
So one of the advantages that the UK has over continental Europe is that the universities there are much more connected to the startup ecosystem and are much more engaged and spinning out significantly larger numbers of companies, led by Cambridge, Oxford, and Imperial. But other UK universities are also moving quickly up that ramp. There was a study done by PitchBook, which came out last year. They surveyed the number of startups, undergraduate startups coming out of universities worldwide between 2006 and 2016. And they looked at these by sector, so software, medical devices, Internet of Things, that sort of thing. And what they found was for the top US universities, so Harvard, MIT, Berkeley, Stanford, that between 40 and 45% of the startups created by undergraduates were software companies. Software companies. If you look at the types of startups that are being created today out of European universities, the numbers are much smaller, but it's a very different mix. You don't get the same large number of software startups being founded, especially at German universities, because in many European countries, the informatics faculties tend to be far more theoretical. They're not teaching software programming as a first area of focus and interest, but also there's less interest today among young people for studying software engineering. UK would be an exception. Here at Stanford, it's the most popular major, for example. So this is, if you look at these numbers about the number of startups, these numbers don't ask the question, so where are the startups originally founded? Out of which institution? Are they people from large corporations who've spent 10, 20 years and then they go off and set up a company? Or are they students at universities? Where in the system are they coming from? A huge portion of the US startup deal flow is coming out of the American university system. Yep. That is missing across Europe with the exception of the UK today.
We actually have that data. In our Startup Europe, Scale Up Europe, we do have the average age of the founders in Europe significantly higher.
But that doesn't mean that they come out of universities necessarily.
Typically, our people have done other stuff in life, right, and professionally speaking, more than being straight out of university in their 20s, as here happens.
Yes?
Just touching on that question of age, I think when we look here, we talk about the little brother, Europe is the little brother of what's happening in the US. I've heard it said that one of the reasons there aren't as many startups in Europe is that mentors are missing. That there isn't this second, third generation of what's been happening in the Silicon Valley to draw on as far as role models. So you look to a role model here in the US, this is possible. I wonder, as I'm hearing, one of the bigger problems is that there isn't that much activity from the corporate side to purchase. If there's no exit strategy, no one wants to invest. Why would I? So is there a dearth of mentors also for executives to go ahead and take a risk and buy and acquire?
Yes, I think that it's true. I mean, factually, that's true. There is a history that is pretty clear. Even in these last 10 years, though, the situation has dramatically increased. So, when we started in 2007, talking about startups and mentorship was really something that, really niche. Today, you name it from whatever. You're from Germany.
Well, I'm American, but
Okay, so I mentioned but so there are incubators, accelerators, startup programs pretty much everywhere at university and whatnot. So that phase of trying to create the community that can help you to the next stage is definitely improved significantly. Before when I moved here, we didn't have the Giacomo Marini in Italy of the world. We didn't have enough of them. Now you can actually see clearly what is missing is a lot of success stories. The serial entrepreneur as a profession. That every 3 years you start doing something different, so you become very sophisticated in that area. So that's still missing. It's going to take time. I don't think though that's an unsolvable problem. I think that's over time will be overcome. I think the main problem is really creating an economy of startups that is sustainable. Today, at big numbers, is not self-sustainable in Europe because of the exit point that you mentioned.
So what you're seeing now today, I'd say, for the last year and a half, going forward another 5 years, is a major culture shift inside European companies, mid-sized and large-sized corporations, which wasn't there even 2 years ago.
Right.
So we're at a turning point now here. What hasn't happened yet is the same culture shift inside the public universities in most of these countries. This is engineering schools and business schools, but also across the academic enterprise.
Is that possible?
It's possible, but it's much more difficult. It's going to take much longer because of how the universities are organized. The philosophy of universities and mission is viewed quite differently. It's a complex issue. There are legal constraints too. This gentleman up here had a question.
Maybe I can comment on this as well, because I'm from Germany, and actually I talked to my dad about it as well, and he was studying 30 years ago, right? He said there was no startup activity back then, also in Germany, right? And now we get a lot of these organizations coming up and say, okay, we have an incubator, present your idea and stuff like that. So there's a lot, I think, a lot of change going on at the moment. But actually, my question is, do you see any increase in startup activity if there's a crisis? I don't know, maybe there's a .com bubble burst, right? Then afterwards you see, okay, now people can't work at Google doesn't employ anybody anymore, right? So do people then start more businesses? I would be curious if there's any data on that.
Yeah, so I think there are a number of questions in your question. One is it's true actually, there is So there's maybe too much acquisition happening here. So all the good stuff have been picked up very early. So there's a lot of discussion of whether that's the real future of Silicon Valley or not. The other forces that I would mention at a macro level is that the world of ICOs, of initial coin offering, is totally disrupting the world of early stage investment. And it's kind of a technical point here, but if you see statistics, that we should write another report about this, but in the last 3 quarters, the money raised through ICO is double the money raised through venture, VC venture, early stage, twice, and growing. So that alone, I think, is the force of change. I'm not saying, there's a lot of complication there because there's a huge gap in regulation, but that's definitely something that is in a lot of people's mind, especially on the venture side. So that has the disruption kind of potential. You want to add some?
I would say, when you all talk about what's inhibiting Europe, when I started out in London, I think one of the factors that inhibit entrepreneurship is a lack of venture money, and with ICOs being raised in different, possibly that can move in and take over. Because if you look at some of the European countries, 200 million in Italy in a year is a very small amount of funding within that whole economy. So, yeah.
Very true.
I agree.
The other thing that maybe is a good ending, but also the other area that is highly missing, we saw it, is the ability to have access to more mature capital. And that's where a lot of the stock exchanges of Europe are working on. There is no venture in the 100 million size, and so now there's a few tools that at least the London Stock Exchange is launching shortly, really to provide that area of funding without going public. So secondary offering and whatnot. In fact, we have an event coming up next week in Italy and then in London, really to see the technicalities of these new opportunities for more mature funding.
We have time for one more question. Yes.
Just to be sure, you have also included, I believe, bioscience in your data, biotechnology and pharmaceuticals. I've seen Roche Pharmaceuticals, for instance, in one of the charts. But the reason why I'm asking, isn't it so that the issue of exit strategy, or let's put it that way, if you want to look for a quick exit strategy as an investor, you probably would not choose pharmaceutical research. I have seen a certain reluctance even here on Sand Hill Road when it came to invest in biotechnology or pharmaceutical research. Because you need probably a lot more patience as an investor.
Yes, and the answer is yes, everything you said. In the data, actually, everything is included, at least in the M&A. So it's all the transactions that happen, so there is no vertical has been, but it's just not as much as you mentioned. I mean, the world of pharmaceutical is still different dynamics. So, the venture world of that goes in different cycles, as you mentioned. It's not going to change anytime soon.
So I'd like to thank our 2 speakers, Gené and Marco. Small gift. Thank you.
Thank you.
And remind each of you that next week is our final session for 2018. We'll be focusing very interesting contrast between Germany, so Munich, and Kosovo and Albania. Kosovo is only 10 years old as a country. And we don't talk about Albanian startups anywhere in the world today, including in Europe. So please join us for a very interesting contrasting discussion between very advanced ecosystem and very new emerging startup ecosystems in Europe out of the Balkans. Thank you both to our speakers.
Thank you.
Also, and let's see you next week. Thank you.